Spirit Airlines has had a rollercoaster week, dropping over 75% in one day and then gaining back nearly 100%. In this video, I will analyse SAVE stock and give you my thoughts on what I think is a very exciting opportunity. What's up guys, and welcome back to the channel. I will explain what is going on and what I expect to happen next. Spirit Airlines has some very big names backing the stock at these prices, so keep watching until the end and let me know if you agree with my analysis or not in the comment section below. I will try to answer the most important question: will Spirit Airlines stock go up? Before we get into the video, I want to thank all you guys who watched my recent videos after taking a long break from YouTube. It was good to hear from so many of you, and it really means a lot to me. Smashing the thumbs up costs absolutely nothing, but it really helps the channel so much. Can we get another 300 likes on this video? Please try help make it happen. And subscribe to the channel if you're new. I will be doing regular stock videos again for the rest of the year. Finally, I want to point out that I'm not a financial advisor. This is not financial advice. Now let's get straight into it. So the very first issue that we're going to talk about is a short squeeze brewing in Spirit Airlines stock? Spirit Airlines is facing an uncertain future. Short interest in SAVE stock is rising as shares continue to fall. A short squeeze could be looming if these trends persist. So if you don't know the story with Spirit Airlines, it has been an awful week for the stock. During the week, news broke that a federal judge had blocked JetBlue's $3.8 billion strategic acquisition of the airline based on competition and antitrust concerns. The development sent SAVE stock into a nosedive, and now fears of bankruptcy and rising speculation that the company has reached the end of the line. However, whenever things look this grim for a struggling stock, short squeeze speculation tends to rise as well, and short interest in SAVE stock is fairly high. Now if you look on Reddit, there is post after post that are predicting a short squeeze for SAVE stock, but I don't think the data really backs this up. From what I can see looking at Fintel, for example, there is probably not enough of the float sold short for any reasonable chance of a squeeze, but that is just my opinion, and it doesn't change the fact that there is a lot more going on here than just a short squeeze possibility. So what we do know is that the Department of Justice won their case against the merger. Attorney General Merrick Garland said on Tuesday that today's ruling is a victory for tens of millions of travellers who would have faced higher fares and fewer choices had the proposed merger between JetBlue and Spirit been allowed to move forward. And this is a very interesting point because this is incredibly short-sighted. If this merger does not take place and if Spirit do not get another merger partner, then there is a possibility that Spirit Airlines could go bankrupt. And if that happens, then this decreases the competition. So I think that it is highly likely that this ruling could be overturned if appealed, which is what I expect will happen next. JetBlue and Spirit told CNN that they disagree with the ruling. We continue to believe that our combination is the best opportunity to increase needed competition and choice by bringing low fares and great service to more customers in more markets, while enhancing our ability to compete in the dominant US carriers. We are reviewing the court's decision and are evaluating our next steps as part of the legal process. But one person who is making a big bet on Spirit Airlines is Dave Portnoy. So Barstool Sports founder Dave Portnoy tweeted out sharing his enthusiasm towards the stock. Portnoy called SAVE stock a mega buy on Thursday, fueling a late week rally. The stock had dropped from over $15 at the beginning of the week down as little as $4 before a huge rally as high as $7.50 on Friday after hours, and which is nearly a 100% increase from Thursday's low in just one day. But Dave Portnoy is making the most sense out of anybody that I see online, and it really is so simple. He tweeted, "Can somebody from Biden's office tell me how you can block a merger when the other option may be bankruptcy? It's lunacy." And later tweeted, "This is my point. I refuse to believe anybody could be dumb enough to say in one breath that Spirit Airlines is too important to the country to merge and then let them just go out of business. Nobody is this dumb." And this is coming from this, which said that the Biden administration, Spirit Airlines takeover will harm consumers, JetBlue deal is blocked, then potentially 6 months later, Spirit liquidates, its airlines are sold for pennies on the dollar, 12,000 employees lose their jobs, and the remaining airlines crank prices up even more. But like, if we forget about any potential short squeeze or the judge's ruling that the merger can't happen, the ruling makes no sense at all. And this is why I fully believe that Spirit and JetBlue will appeal it, and I think that they will win. Now, this is not financial advice, this is just what I think from looking at this from a logical point of view. So before we look at the latest financials for a moment, to really highlight this point, first, if you're new to the channel and have not subscribed, then consider giving this video a thumbs up and subscribing to the channel. After the judge ruling, the analysts were very quick to jump in and destroy SAVE's stock price. 4 analysts quickly dropping their price targets for Spirit Airlines down from as much as $20 to only $4 or $5. Like, this price for only $4 would have Spirit valued at a market capitalization of only about $500 million. That's $500 million for an airline. The JetBlue merger agreement was valuing Spirit at $3.8 billion. So there is something very odd about these sudden price targets, because the deal was valuing the shares at approximately $33 per share. So let's look at the most recent financial statements to get a better idea of what's going on. We can see here that Spirit Airlines is racking up huge losses every quarter, but we can also see that the company is going in the right direction. Revenue is actually up in 2023 when compared to 2022, up from 3.6 billion to 4 billion in the first 9 months of 2023. However, the operating losses have increased greatly, which is the reason for the huge loss, and I will discuss a bit more about this in a moment and why I don't think that this will be such a huge issue going forward. But when we look at the balance sheet, we can see that they have total assets of 9.3 billion and total liabilities of about 1 billion and total liabilities of about 8 billion, leaving total shareholder equity of $1.3 billion. So its shareholder equity is $1.3 billion. I find it hard to believe that analysts could be rating this stock at $4 or $5, even valuing the stock at only a fraction of its equity valuation. Like, these are the same analysts that were predicting Spirit Airlines to have a positive EPS come 2024. So their analyst price ratings make no sense. With that being said, the company does have debt, but it doesn't seem too extreme, to be honest, and I do feel that a restructure with a merger would easily solve a lot of Spirit Airlines problems. Now, this is an article on Seeking Alpha. Spirit Airlines Chapter 11 is not on the horizon. If you want to have a quick read of this, I've put a link to this in the description below. Also, check out the first link in the description below. If you are not already signed up to Seeking Alpha, you can sign up using my link and get up to 50% off a yearly subscription. At the moment, Seeking Alpha are giving a free 7-day trial, so check this out. If you don't like it, then cancel it within the 7 days at no cost. Personally, I love the number of articles that are on here and give a lot of different perspectives on a whole lot of stocks. So check out Seeking Alpha using the link below. So Spirit Airlines faces bankruptcy risk, but the airline has cash and assets to stave off the risk for a considerable time. The stock looks appealing at $6, with the domestic air travel market likely to improve in 2024. Now, this is quite a long article, so I'm skipping right down here to the bankruptcy part of the article. The airline appears to have a case for appeal, but the investment thesis here is based more on whether bankruptcy risk is actually logical, with the stock falling all the way to $6. While TD Cowen proposed that Spirit Airlines would seek another buyer or end up in Chapter 11 bankruptcy, the airline appears headed for neither outcome. Although Spirit reported some weak results in Q3 2023, they aren't likely to need Chapter 11 filing. The airline entered the summer months expecting a massive profit, but for multiple reasons, they ended up reporting massive losses. And now this is very interesting. The consensus analyst estimates entering 2023 for Spirit Airlines was to earn nearly $1 per share for the year, with forecasts of $2 EPS in 2024. The domestic sector ran into fare pressures, with consumers focused on international travel, and higher fuel costs hit profits just as fares were coming under pressure. At the end of September, Spirit had cash balance of $1 billion. The airline is not in a bad position despite having a debt position of $3.3 billion. Investors commonly forget that the airlines are asset rich. Spirit Airlines has $3.7 billion in net property and equipment to offset any outstanding debt, which we seen a moment ago looking at the financials. Only a week ago, Spirit sold off 25 planes to generate over $400 million in cash to repay debt. As mentioned, the airline has plenty of assets to repay debt, and Spirit wouldn't be making these moves if bankruptcy was actually on the cards. But now for the most important point. Spirit Airlines and JetBlue had no incentive to report strong profits during this period, because it would only provide fuel to the fire of regulators to block the merger. So the key takeaway here is the airline is a bargain at $6, with expectations that the domestic market will improve in 2024 and Spirit Airlines will return to $1 or $2 earnings per share target prior to the merger. In addition, the airline could still win the merger approval on appeal, providing substantial upside to the stock, with the deal still valued at around $30 per share. Let me know your thoughts in the comments below. If you've watched all the way through and enjoyed the content, then please hit the like button. It really helps the channel out a lot. If you're new, hit the subscribe button and bell notification, and follow me on Twitter if you would like to see another update soon. Nothing in my videos is financial advice in any way. I'm not a financial advisor, but thanks for watching and I'll catch you in the next one.